Good morning and welcome to today's board meeting. We have one item on our agenda for today, a discussion and a potential agenda decision related to accounting for transfers of crypto assets. So with that, let me turn over to Jack Sherman to tee us up this morning. Good morning, Jack.
Thank you, Rich. Good morning, everyone. The purpose of today's meeting is for the board to discuss whether to add a project to its technical agenda related to the accounting for crypto asset transfers, including expanding the scope of subtopic 350-60, clarifying the derecognition guidance for transfers of crypto assets, or both, as a result of the staff's research to explore targeted improvements to the accounting for and disclosure of certain digital assets and related transactions. As described in paragraphs 2 through 6 in the handout, in December 2023, the FASB issued Accounting Standards Update 2023-08 to improve the accounting and disclosure guidance for crypto assets within the scope of that standard, which is now subtopic 350-60 in the codification. Under the current scope criteria, a crypto asset that provides a holder with a right to receive another crypto asset is excluded from subtopic 350-60 and therefore is measured at cost minus impairment if it meets the definition of an intangible asset. An entity is required to account for the derecognition of those crypto assets that are intangible assets by applying guidance in subtopic 610-20 on gains and losses from the derecognition of non-financial assets and topic 606 on revenue from contracts with customers. During the 2025 agenda consultation process, stakeholders commended the board for issuing the amendments in Update 2023-08, noting that those amendments reduced costs for preparers and increased the decision usefulness of the financial statements for investors. However, many stakeholders noted that although the crypto asset guidance reduced costs for preparers and increased the decision usefulness of the financial statements for investors, there are several unresolved accounting challenges that continue to create diversity in practice and result in financial statements that do not reflect the economics of crypto assets, such as the scope of subtopic 350-60 and the derecognition accounting for crypto transfer arrangements. Subsequently, an agenda request was submitted asking the board to address various aspects of the accounting for liquid staking tokens, including revisiting the scope of subtopic 350-60 and providing derecognition accounting for liquid staking tokens. As noted from stakeholder feedback, there are challenges and diversity in practice related to the accounting for common types of crypto transfer arrangements, including crypto lending, crypto staking, and crypto wrapping. Many of these arrangements involve the transfer of crypto asset holdings that are outside the scope of subtopic 350-60, but have similar economics to the underlying crypto assets. A detailed summary of the stakeholder feedback is in paragraphs 9 through 21 of the handout. On the basis of stakeholder feedback and staff research, the staff analyzed the FASB's decision-making criteria listed in paragraph 22 of the handout. For the first agenda criteria on identifiable and sufficiently pervasive need, stakeholders have observed the increased prevalence of wrapped tokens and receipt tokens since the issuance of Update 2023-08, and those tokens in many cases are outside the scope of the crypto asset guidance in subtopic 350-60. Commenting that wrapped tokens and receipt tokens are economically similar to their underlying crypto assets, stakeholders generally recommended that those tokens be treated similarly to their underlying crypto assets for accounting purposes. That is, measured at fair value with changes recognized in earnings. Stakeholders noted that measuring those tokens differently from their underlying crypto assets creates operational complexity and inconsistent financial reporting. It may also result in artificial gains that are not decision useful for investors. Stakeholders also noted that the diversity in practice in accounting for crypto transfer arrangements has led to inconsistent and sometimes counterintuitive accounting outcomes. They observed that entities have been applying a variety of guidance in topics under GAAP or non-authoritative guidance to account for these evolving transfer arrangements on a transaction-by-transaction basis. As a result, financial statements may not consistently or accurately portray the economics of those crypto asset transactions. Therefore, the staff thinks that stakeholders have identified a sufficiently pervasive need to improve GAAP, to expand the scope of subtopic 350-60, and to clarify derecognition guidance for the transfer of crypto assets. Now I'll turn it over to Alden to tee up the next two agenda criteria.
Thank you, Jack. On the basis of stakeholder suggestions, paragraphs 24 and 25 of today's handout lists the potential alternatives for the board's consideration. As it relates to the scope of the crypto asset guidance, the staff notes that there is general agreement among some practitioner stakeholders on how to revise criterion B in paragraph 350-60-15-1 to include wrapped tokens and receipt tokens in the scope of subtopic 350-60. Under this potential alternative, wrapped tokens and receipt tokens would be measured in a similar manner at fair value to their underlying crypto assets, which, in stakeholders' view, would better reflect their economics. In addition, because Subtopic 35060 requires more detailed disclosure about crypto asset holdings than the general disclosure requirements in Topic 350, expanding the scope of the crypto asset guidance to wrapped tokens and receipt tokens would provide investors with more transparent information about the types of crypto assets held by the entities and the changes in those holdings. To address the accounting for crypto transfer arrangements by the transferor, the staff thinks that providing principle-based rather than example-based guidance that more closely aligns with current GAAP would better address the issues identified in practice and accommodate for evolving arrangements. Therefore, the staff does not suggest further exploring potential alternative A listed in paragraph 25 of the handout. The staff notes that both potential alternatives B and C would provide principle-based guidance as opposed to example-based. Potential alternative B would continue to require the application of the control guidance in Topic 606 with an additional clarification on how an entity should consider the repurchase guidance found in paragraph 606.10, 5566 through 5568 in addressing the transfer of control for crypto assets. For example, the board could consider leveraging the discussion in paragraph BC 425 of Update 2014-09, which explains that a transferee is not constrained in its control of the asset if a transferor agrees to repurchase at the prevailing market price an asset from the transferee that is substantially the same and is readily available in the marketplace. Potential alternative C would develop specific derecognition criteria for crypto assets by leveraging the concepts and the current derecognition requirements and various topics in GAAP, such as Topic 606 and Topic 860 on the transfer of financial assets. The staff acknowledges that potential alternative C would provide more direct and tailored guidance on the specific class of crypto assets than alternative B. However, because stakeholders viewed the current derecognition model in Topic 606 as relatively comprehensive and did not broadly request the development of a new derecognition model, the staff thinks that potential alternative B could be a more efficient solution by providing a narrower clarification to the current guidance and to practice. In summary, the staff thinks that there are technically feasible and cost-beneficial solutions to expand the scope of Subtopic 35060 and to clarify the derecognition accounting for crypto transfer arrangements. Because stakeholders have not directly raised the specific request to the staff or to the board to address the transferee's accounting, the staff has not fully researched that area at this time. However, if directed by the board, the staff could conduct outreach to further understand the circumstances in which accounting asymmetry may occur, whether there is a pervasive need to address it, and if so, when and how to address the transferee's accounting. Regarding the identifiable scope analysis of the agenda decision criteria, the staff thinks that crypto assets could be addressed under a potential project would be crypto assets that provide the holder with the right to receive another crypto asset that otherwise would meet the scope criteria of subtopic 35060, such as wrapped tokens and receipt tokens. This potential project could also aim to address the common crypto transfer arrangements, including lending, staking, and wrapping, and other transfer arrangements with similar structure and design. Collectively, the staff thinks that addressing the derecognition accounting for the transfer of crypto assets that are within an expanded scope of subtopic 35060, as described, would better address requests from stakeholders. The staff considered but dismissed other potential project scopes, such as only addressing the accounting for the transfer of crypto assets that are currently within the scope of 35060, or addressing the accounting for all digital assets, including those that meet the definition of financial assets. The staff notes that those potential scopes either do not address stakeholder requests or are beyond the improvements requested by stakeholders in this area. To summarize, on the basis of stakeholder feedback and staff research, the staff thinks that both of these areas, expanding the scope of subtopic 35060 and clarifying the derecognition guidance for crypto transfer arrangements, meet the FASB's agenda criteria. Therefore, the staff recommends that the board add a project to its technical agenda. Because of the close interaction between these two areas, the staff suggests that the board address them together as one project. The objective of the potential project would be to address the diversity in practice related to the accounting for transfer arrangements of crypto assets, including wrap tokens and receipt tokens. The staff expects that the potential project would reduce the complexity and costs for stakeholders and provide investors with relevant, comparable, transparent, and decision-useful information. If the board adds a project to the technical agenda, the staff plans to perform research and outreach to further develop the potential alternatives for deliberations at a future board meeting. With that, I will now hand it back to the board to discuss questions 1 and 2 in today's handout.
Okay, great. Thanks, Alden. Any questions for the staff? Okay, not seeing any. Joyce, could I start with you this morning?
Sure. Thanks, Rich. Good morning, everyone. Thank you, staff, for taking a subject that is new and evolving and in many aspects complex and providing clarity in your board memo, including providing illustrative examples of crypto transfer arrangements. It was greatly appreciated in preparing for today's discussion. I support adding a project to the agenda with the objective of expanding the scope of our current crypto guidance to potentially include wrapped and receipt tokens in the scope of subtopic 350-60. I also support clarifying the derecognition guidance for crypto transfer arrangements that you've identified. I certainly agree that investors would benefit from financial reporting that is more consistent with the economic substance of these transactions, hence a fair value measurement approach with changes reported in earnings would benefit investor analysis and certainly removes incomparability in the accounting for similar assets differently. It also limits the possibility of income recognition from distinctions between the cost basis versus the fair value of wrapped and unwrapped tokens in exchange transactions. So I think that will be quite positive in investor outcomes. In addition, the broadening scope to address the wrapped tokens and the receipt tokens would provide investors greater transparency because of the applicability of the disclosure requirements that already exist in 350-60. So I think that there's some benefit there. However, I would like for us to discuss with investors whether or not the wrapped characteristic results in incremental disclosure needs, which were not taken into consideration in those disclosure requirements that we formalized in the standard previously, just to ensure that we're capturing all of the potential risks that they would be interested in. And of course, preparers potentially benefit from removing the dual measurement of the similar crypto assets, which would reduce accounting complexity for preparers. That's quite positive for them to now have a single accounting model potentially. So I view for those reasons that more research is justified to address the applicability of the existing guidance and whether or not there are opportunities to put forth incremental guidance for matters that the board previously deferred, but they currently meet our agenda criteria. In regard to derecognition, I support alternative B. Clearly, there are various areas in our guidance and in non-authoritative sources that are being leveraged to determine the derecognition model to apply, which, as you've indicated, it's caused diversity in practice and incomparability. So I think that there's a better opportunity in alternative B to maintain the board's initial intent, which was to apply topic 606 And the language that the staff has identified and put forth from the discussion in BC 425 of 2014-09 affords an opportunity to address the highlighted transfer arrangement control issue. So I think the staff should conduct further research, explore whether codifying the basis discussion is a viable, operable solution, and if so, also conduct research to learn, once again, what, if any, additional transparency is necessary by investors so that they would perhaps better analyze, for example, lending or staking arrangements and risks. Unlike Alternative A, I agree with the staff that Alternative B is an opportunity where standard setting could potentially create a more principle-based approach. And I think that's certainly preferable than one that is example-based. It's an opportunity to address crypto transfer arrangements that perhaps were not included in those examples that may have more complex rights and obligations. As it pertains to Alternative C, I think that that too could be a viable route to pursue. However, I would prefer for us to first, before creating potentially a new derecognition model that could have implications beyond the scope of those digital assets that we're aiming to address, I think we should first research and assess whether or not Alternative B is feasible, and if not, whether or not an Alternative C approach will compensate or better capture what we're trying to, in our objectives for this project. In regard to transferee accounting, I think the staff should conduct research to consider whether there is or the potential of asymmetry in the accounting between transfers and transferees. I think we should be ahead of any potential unintended consequences and to precede the possibility of non-authoritative sources taking the lead.
Okay, thanks, Joyce. So,
Thanks, Rich. And thanks to the staff for the very detailed paper. I thought it was terrific. It's a complicated area. I guess as it relates to the first 1A, full disclosure, I was one of those board members at the time who preferred to consider this issue separately, given where we were in redeliberations, and I felt at the time that it needed some further research. But I acknowledge now the sentiment that's been expressed very consistently in the feedback that we received that, these things, wrap tokens and receipt tokens, are economically similar, but accounted for differently. I would add a project to expand our originally narrow scoped criteria as the staff has suggested. I think it meets our agenda criteria. I must admit, I really like the idea of not only the accounted for economically similarly, but I also like the idea of them having to apply the disclosures that we currently developed in ASU 2023-08. So I think that's kind of a win. I also think that to the extent we do some incremental research, it would be useful to know, I think similar to Joyce, whether investors think about these things differently at all. Does the nature of it being a wrapped token instead of a plain vanilla crypto asset make any difference to them? And that would be useful to understand in terms of whether there's incremental disclosure that's necessary. So 1A, I would add. 1B, on the derecognition. I think that, consistent with the focus of the ITC, we heard in advance of the ITC an interest in this area, included in the ITC. It was validated by the ITC. I think that we've got that recommendation out there from the Presidential Working Group on digital asset markets. And I think that there's a lot of interest and potentially need for this guidance, considering the number of common crypto transfer arrangements. So I also think that this would meet our agenda criteria to add it to our agenda. I think as it relates to the alternatives put forward by the staff, I guess I'm most interested in alternative B from the perspective of I think it has the greater alignment with these assets as intangibles. And it sort of follows the linkage in 350.10 to 610.20 to 606. But I know that the way it was described by Alden, it seemed more like a clarification. I wouldn't necessarily be so rigid as to say that to the extent we needed some implementation guidance that we couldn't do so as part of this. And that may be an example, it may not be. I just want to sort of stay open-minded to that. But I also think that alternative B will have cohesiveness with our existing guidance. And I also think it'll improve the relevance and the completeness of the codification itself, considering that many folks today use the AICPA guide. And I think I kind of incorporated most of question 2 and question 1, but I also agree with, I think in the memo, you talked about some incremental outreach that you were planning to do to sort of, I'll call it refresh some of the original outreach. As it relates to the transferees accounting, I would incorporate that outreach as part of this project, but I wouldn't necessarily want it as part of this project. In other words, I would like the outreach because it's efficient to have the dialogue at the same time, but it will just inform us. But I wouldn't necessarily include a transferee accounting as part of this project. So I think I covered it.
You did. Thanks, Sue. Marcia?
Good morning. As it relates to the questions, expanding the scope of subtopic 350-60, like Sue, I voted in the initial deliberations that we move forward with what we had at that time. But I also expected this to come back to us. I think at the time of those original deliberations, it was a matter that I felt that we needed to better understand this marketplace. And I think the work that the staff has done has helped very much in that regard. And I do agree that this meets our criteria. So yes, on 1A, I would add this to our technical agenda. And I understand that the pervasiveness of this to those in the marketplace is just going to continue to grow. So I think that's consistent really with our initial deliberations and where we started on dealing with these types of digital assets. With regards to clarifying the derecognition guidance, I also support adding that to our agenda. I agree with the staff analysis that this meets the criteria that we have. Personally, I prefer a principle-based outcome. I know at this time you're starting the work on what all those outcomes could be based upon the research and the feedback that we've received as part of this process. I think like Sue, I really want to see us explore and flesh out alternative B and make sure we understand the consequences of those ideas first. Because again, it is principle based, and that tends to be where I prefer that we be on all standards really. As it relates to the question of the transferee accounting, I like the way Sue phrased that. That's going to inform us as we understand these transactions. I can remember being in a conversation one time with someone who talked about, well, do the books of the world need to balance? Which would say, if there's derecognition on one side, must there be recognition on the other side? I don't believe that that needs to be the scope of this project. I think we could continue to take that on if we find that guidance needs to be clarified, but I would like to understand what's happening in the marketplace today and where are the issues, because I do think these types of transactions are just going to increase. And if we can be proactive, I'd like to do that, but that doesn't necessarily have to be as part of this project. It could be a separate project on its own, just like bringing tokens back now was a separate project than what we finalized earlier.
Okay. Thanks, Marcia. You got everything. Fred?
Thanks, Rich. Like Sue and Marcia, I was also did not support adding wrap tokens at the time that we finalized the crypto accounting of 350/60. My reasoning at that point in time was that the risk of opening this up to all kinds of synthetic instruments that we didn't understand. So why am I changing my mind? I think really the reason I'm kind of moving towards this is the most compelling argument to me is the transparency that we provided in 350/60 regarding the disclosures. And I think that was evident, when I was talking to the staff about the second issue, which is on derecognition, is that they were able to go back and find, I think it was 6 crypto companies where there was inconsistency in the accounting for derecognition. And they were able to find that because of the extensive disclosures we require, including the roll forward. And so I think that, in my mind, underscores that ensuring that we apply this disclosure as across a wider range as possible is beneficial. And that's why I do support it. The primary reason I support adding this project at this point in time. I think we will have economically similar transactions and disclosures and transparencies. And I think it's important, from my own standpoint, that I supported our crypto accounting because I felt like whether you were a crypto skeptic or a crypto proponent, what we provided was accounting that was provided better economic reflection of the economics of the activity and provided full transparency. And I think we can continue to move in that direction, no matter how people view cryptocurrencies today with adding this project. Like the others, I also think that, I think a principle base is better. I wouldn't want to get into the list project of every time this industry comes up with a new product that we have to go back and add it to the list. So I also am supportive of that. I also think a linked project to derecognition is important. I think we have seen diversity in accounting as the staff was able to demonstrate, going in different directions. So I think continuing to explore that's important. And I think while I continue to support crypto being in our intangible guidance and in its intangible issue, I think that we want, to the extent possible, mirror the accounting for financial assets. And I think to the extent that we mirror that accounting for this asset that's primarily used today as a speculative investment, I think that's helpful. And I think so. I do support that. I also support the approach B that you have at this point in time. And I think I've answered the questions. Thanks.
Thanks, Fred. Christine?
Good morning. I'll address both questions 1 and 2 at the same time. So first of all, with respect to the scope of 350/60, I supported addressing this issue before we issued update 2023-08 because I was concerned that we would end up in a place where we had the same economics accounted for inconsistently. And whenever we have that situation, it can really cause problems. And I think that the stakeholders that provided feedback provided some pretty good arguments that is, in fact, where we're at. So I think we need to address the scope issue and to address that problem along the lines of what the staff suggested in terms of the change to, I think it's part B, right? The derecognition issue is tricky for me because I really don't think that the types of transactions that we're considering are pervasive outside of crypto entities trading with other crypto entities. I think it's a very insular set of transactions, and it's not broadly pervasive to the marketplace. That said, I didn't support taking on the project that led to the issuance of 2308 because I thought that we were addressing a pervasive issue even then. I supported taking on that project because measurement of the assets that are within scope of subtopic 35060 at cost plus impairment, in my view, was just simply wrong. And it was so wrong that we needed to fix it and move that measurement to a fair value basis. I think when it comes to derecognition, while I don't think it's pervasive, I think we are in a similar situation, in my view, in that a strict application of the derecognition guidance in 350, I think would generally lead to the conclusion that you shouldn't be derecognizing even when you should be derecognizing, and that I think is a problem. So for that reason, while I don't believe that this is a pervasive issue, I do think we need to address that issue. And so I would support including the derecognition issue in the project. And given the limited pervasiveness of this issue, I'd prefer that we address the issue as quickly and as narrowly as possible, which puts me in alternative B, scope to include only assets that are in the expanded scope of 35060. And when the staff comes back to us next, I would like to understand not only the accounting for the derecognized crypto asset, but also the accounting for any assets that are recognized in return. So, for example, in a direct lending transaction, the receivable that embodies the counterparty's promise to repay the lent token, would that be within the scope of 35060? Would that be within the scope of other guidance? What would be the measurement basis? How would the measurement of that receivable encompass counterparty risk, if there is counterparty risk? So I really want to understand kind of the whole transaction, not just the what's getting derecognized. And on the transferee accounting, I don't think there's any harm in being efficient and asking about that as we're doing other outreach. But to be frank, I'm really not interested in a project to address transferee accounting at this time. I don't think it would meet my pervasiveness bar, but I don't see any harm in asking about it.
Great. Thanks, Christine. Hillary.
I really appreciate the team's work on this, as well as all of the feedback that we got from stakeholders through the invitation to comment. And just in case my voice gives out, I will just say I absolutely support adding a project to expand the scope of 35060 to include crypto assets that provide a right to another crypto asset that would otherwise meet the scope criteria in 35060. And I would also support addressing crypto derecognition as well. With regards to the scope of 35060, I never had to vote on that. So I can say that, certainly I support that. And I think really it comes down to making sure that we have, economics that make sense and are provided transparently, right? We have these circumstances where effectively wrapped tokens and receipt tokens, you could think of them as almost derivatives of the crypto asset themselves, and the marketplace generally generally has those valued very similar to the crypto asset. So having a different measurement model doesn't make a lot of sense to me, and I think will provide additional transparency, as discussed by many of our other board members. I also think it's really important, if we're looking to look at derecognition, is to expand the scope of 35060, because many of the derecognition and transfer type of transactions are what result, the result is something that is a right to another crypto asset that we need to make sure would meet the criteria in 35060. So I think those two naturally go together. Appreciate the staff kind of bringing them as a package deal from that standpoint. With regards to the derecognition guidance, I do believe that there's a lack of authoritative guidance here, and we've seen significant diversity in practice. And certainly there's going to be differences in perspectives from a facts and circumstances perspective, but I think that we can provide a model that can be applied to those different facts and circumstances going forward. I think that will really level the playing field for all of different stakeholders out there that might be looking at these type of arrangements. I certainly think that that's a good use of time and will, eliminate a lot of that diversity that exists today. With regards to the different approaches that were identified by the staff, certainly would be more supportive of going down an approach B. And certainly, we are in the intangible asset guidance. And so, while, some of us are, myself may have more interest in certain things like a financial asset guidance, derecognition model, I certainly want to stay true to where we are, which is in the intangible asset guidance. So I think kind of keeping it within the scope of that, 606 derecognition guidance, and really trying to make sure I think of this as more of a very kind of limited type of guidance to ensure we know how to apply the guidance in 606 to crypto transfer arrangements, right? I'm not looking for there to be broad-based changes with regards to the derecognition guidance in 606, but how do we apply it to these type of transactions? And specifically, I think the key there, is one of the things related to repurchases, and how do we think about the guidance that exists in 606 and how that should be applied for these type of arrangements. So certainly, I think that's an area that is important for us to address and to clarify as part of this project. I will say, though, I do think with alternative C, I think the more we kind of tweak the different criteria in topic 606, you could end up almost in an alternative C, which is a derecognition model for crypto assets. But certainly I'd like to be much more narrow with regards to that. With regards to transferee accounting, I think just staying true to 606 doesn't address the transferee accounting. I would not be exploring transferee accounting as part of this project. So certainly, I don't think that that's necessarily a key component of this project. And I think if we can focus on the transfer accounting, we'll be able to get a lot of great guidance out there for folks who are applying this today.
Thanks, Hillary. So on issue 1, I'll support adding a project on scope focused on amending 350-60-15-1B, which I think is the appropriate section. And I'll admit I didn't have a good understanding of the breadth of transactions some wanted us to include in that amended definition the first time. I think the way the staff has presented it and the research you've done, we can get a bow around that. There's a couple things, though, that I would emphasize. Think about the interaction with derivative guidance. I'm assuming one of our other criteria, like A, meet the definition of intangible asset, would mean that it's very clear you're in one or the other. And maybe if they're both at fair value, it doesn't matter. The other is we have a criteria F, are not created by or issued by the reporting entity or its related parties. I assume both the underlying crypto asset and whatever it's wrapped with would have to meet that criteria. I think we should think about that and just be very clear on that. I'm also supportive of pursuing derecognition, and I prefer path B. I think failed sale accounting for tangible and intangible assets, it's a non-intuitive answer because you end up accounting for something in a failed sale that you no longer have. So I'm not interested actually in dealing with the transferees accounting because I think they actually get the right accounting. And if we're going to change it here, I think we need to go look at inventory accounting. I think we need to look at PP&E accounting. I think we need to look at every non-financial accounting recognition standard we have and do that. The board purposely didn't do that when they did revenue recognition guidance. They said it only applied to the seller. But I think characterizing something that's been sold or changed as something you no longer have doesn't make sense. So I'm certainly supportive of looking at it here. If we ever wanted to go broader, I would go back into 606 and 610 and start considering failed sale accounting and whether or not we're misleading users of that information by mischaracterizing the asset that the entity has, which is simply a right to get something back, possibly. So in that case, I'm supportive. I would go down path B. I do want to be careful, though, because there's you might almost say an infinite number of variations of transactions that can occur in this space. And I'm a little concerned that if we get too targeted, we're going to be opining on every single business model out there. And I don't think that's what we should do. I think in general, people know how to do the accounting here. I think they've highlighted a few areas where I think we can bring some clarity. But I do want to be careful that we don't get effectively wrapped up into every business model. Some of these transactions, I don't think there's really a transfer to a counterparty. I think there's simply an overlay of another item. So if we're careful with the way we write the scope, it doesn't mean they're out of the scope of fair value accounting, but I don't want to start opining on whether or not that's a transfer or not. And I think even going anywhere near the transferee accounting, that's going to get us into that because we're not going to find necessarily a transferee in some of these transactions. So for those reasons, I would not do that. Okay. Sounds like you have enough to get started. We have an existing research project on digital assets, but in my view, we have addressed the main drivers of that research project. To the extent there's other issues, I think we can deal with them through our normal, either bringing back the input from the agenda consultation or additional research or additional agenda requests. So I'll remove that from the research agenda at this point in time, unless somebody thinks we're missing something. And I look forward to you coming back on this project. Great. Thanks, team. Appreciate it. And that wraps up our meeting for today. Thank you, everyone.